Hello and welcome to episode 23 of the Gold Goats and Guns podcast. My name is Tom Luongo. It is Tuesday, July 25th, 2017. And so we've got a number of things happening on both the domestic and the geopolitical front, which is really creating some very odd behavior in the markets. And it all seems to be stemming from an inability by the Trump administration to chart a path that is independent from his opposition. And it's really quite obvious at this point that unless Trump starts to make some serious challenges to his opposition, that this is going to end very badly. Okay. So, but before I get into the rest of it, I want to remind everybody, listen, I'm going to be shutting down my Periscope channel in the next couple of weeks. I'm going to be moving over to YouTube Live. So if you're not subscribed to my YouTube channel, but you do like what you hear, please go ahead and subscribe there. We'll be doing YouTube Live chats on Monday nights at 8 o'clock and Friday nights at 9 o'clock. I mean, every once in a while I may pop into Periscope for a small thing, but it won't be a huge, it won't be the same kind of thing that I do currently. And the second thing is to remind you that the Halsey News Indiegogo crowdfunding campaign is still ongoing, and if you're a fan of any of the work that I'm doing over there, or Steph McWilliams, or Tim Preuss, or anybody else, it would be a great thing for you to drop by and donate a couple of bucks to the effort so that we can get capitalized and build out not just a proper site network, but also to the part of the funds would go to building out a conference on how to teach people on how to become better internet media personalities and help them to monetize and sustain their businesses. So it's not just a matter of throwing cash into a black hole, but it's actually more about bootstrapping an entire industry and teaching people how to truly challenge the ridiculous corporate media that we currently have. So if you can do so, it's going to be, I'll have a link in the description of this podcast down below. But if you just go to like halsey.indiegogo.com, you'll be able to find it. If you go to halseynews.com, there's a banner ad right there as well. So really would appreciate that as well. That being said, let's get right to it. Okay. So the situation between Trump and his cabinet members, and it's certainly the cabinet members that most people who voted for Trump, most of us hardcore politicos liked his choices of. That Jeff Sessions was the kind of the de facto best choice for Attorney General, and Rex Tillerson was a great choice in the end for Secretary of State, which I still think is the case. Those are all the people now being targeted, either by Trump himself in the case of Sessions, who has steadfastly done nothing of consequence as Attorney General, except to recuse himself stupidly from any Russia probing any Russian connections between the Trump administration, right, and the Russian government. And this is what's unleashed most of the storm around Trump on this issue, which is, frankly, at this point, absolutely nothing. And then there's Sessions not doing anything to investigate the Hillary campaign, who actually has significant ties to foreign governments trying to dig up political dirt on their opponent, on her opponent. So it's at this point, Sessions has got to either fire everybody underneath him, Rosenstein, Mueller, the special investigator, and or himself, and start counterattacking what's going on, or he needs to just get out of the way. And Trump is absolutely right to put public pressure on him at this point, because he's not putting public pressure. He's not going to put pressure on him behind the scenes. Would not make a lot of sense. To do it publicly is actually the right way of going about it at this point. At this point, it empowers Sessions to actually start to make a move in some substantive way. We also, it's also understand that a lot of this is kind of darkness before the dawn thing, because Trump's replacement FBI director is still stuck in confirmation hell. Still hasn't happened yet. He's passed the Senate approval committee, but he hasn't actually been confirmed by the Senate yet. So we still have Andrew McCabe, who's obviously a Hillary agent, running the FBI at this point. So, and a lot of that is what's playing into the really weak dollar markets at this point and the really strange movements that we're having in the currency markets. Because between this freeze up in Washington, and I think I talked about this in my last podcast, you had Mueller's announcement of widening his investigation, like literally right after John McCain said he had brain cancer, to deflect that part of the narrative and keep this smoke and mirrors running. That we saw the euro bounce, we saw the dollar crash. I have an article up on Halsey News right now talking about how the world's two most important central bankers were rebuked by the market in a sincere way, and that's actually setting the stage for the next. In the end, is going to be what set the stage for the next crisis. So this is, here's a brick in that wall being removed of the central bankers, efficacy. I always said that if we're going to have the next big financial crisis, it was going to be when we have a loss of confidence in both our government, which look at what's going on in our government, and then we can look at the same thing that's going on over in the EU, and everything is just a mess. And then the rest of the institutions that are even quasi-government, in the case of the Fed and or the ECB, these are institutions that undergird the stability and the liquidity of the capital markets. And the minute that faith is lost once there's a critical mass of that faith lost, that's when the system will start to break down. That's when people are really going to start going to cash, and that's when derivatives will start to seize up, and that's when people won't be able to pay, and that's when home prices will start to fall, and all of these things will start to happen, and when it starts to happen, it's going to snowball very, very quickly. Okay, and so right now we've got a weak Trump, so therefore we have a weak dollar. And when we have that, along with a completely deadlocked, do-nothing Congress that is actually at this point almost priding itself on getting nothing done, and we have a debt ceiling vote that has to happen in October, the market is naturally getting quite jittery. So we've got 3-month T-bills now trading at a higher yield than 6-month T-bills. So we have an inversion of the yield curve at the short end because of the debt ceiling. Again, now whether or not this is kabuki theater like it always is or not is irrelevant, because this is July, and so October is at least this is any discussion about this is 3 months away before we're projected to run out of money. Now, interestingly enough, we were supposed to run out of money by now, but Trump has done such a good job at managing the budget that managing actual spending, that this has been postponed for another 3 months. At least that's what the current projections are now, whether or not that pushes out into November or whatever. But at some point, we're going to run up against the debt ceiling problem. It's just going to happen because tax receipts are just not covering spending. And Congress is going out of its way to try and ensure that the spending cuts that Trump has put in place are repealed. So it's like, it doesn't matter at this point. You have a Congress and a political class that just wants him gone, so that they can get back to doing what they did previously, which is spend you and I into debtor's prison, and then blame us for it, and then force us to work as feudal slaves to this ridiculous system. And that's what they want, and that's what they're going after. At the same time, they don't want that's who's driving this. That's the ideology of the people who are driving all this. And then there are the hanger-ons who just go along to get along because why not? Because they're making money. And they don't want to they don't want to rock the boat. Most of the people who are in Congress are followers. They're not leaders. This is why John McCain's career being effectively over, regardless of what he does today to come back for the welfare vote, where they wheel him out burning a weekend at Bernie's like to cast his vote on healthcare or Russia sanctions or whatever the hell it is he's going to do until, finally, time and karma take their toll on that man. But, it won't, at some point, all of this is going to really start to break down, and you have to watch it from that perspective and see, whether or not Trump can actually survive all this until next year. I think at this point, he should just start firing everybody. I don't believe the stories about Rex Tillerson wanting to be out of State Department. I think that's yet another planted story to try and create the illusion that there's even more turmoil within the Trump administration than there actually is. But I think the situation with Jeff Sessions and Mueller and Hillary Clinton and everything else is intolerable. And Trump's tweets today put Sessions on notice to go after Hillary or get out of the way, and I'll put somebody else in charge. Because at this point, he could do a recess appointment to install Ted Cruz or Giuliani or anybody. Hell, for 3 months, Andrew Napolitano would do a bang up job as AG and just start destroying stuff left and right. And that's what needs to happen. And the fear of God needs to be put in these people, and it's not there. So this is why they're acting the way they are. All right. We have a new set. We have the expanded Russia sanctions. Our bill, the sanctions on Iran and Russia is going to hit the House today. Trump has signaled that he wants to play ball with it, which is moronic. Personally, all this is going to do is further the split between the U.S. and EU. It's going to further push the EU to make concessions. Because, look, the whole point of the expanded sanctions, the riders on that bill that really matter to us, is whether or not Nord Stream 2 is going to go through. Right? And Gazprom is getting killed again on the Russian markets because, oh no, the United States is going to stop Nord Stream. No, it's not going to stop Nord Stream. There's no way it's going to stop Nord Stream. What will happen here is that the EU will cut deals with the companies that are helping Gazprom to fund this thing, and they'll offset the cost because Germany wants Nord Stream, and so Germany runs the EU. And the truth of the matter is that Germany will get the rest of the EU to pay for the fines that the United States put on Shell and Wintershall and OMV and all the E.ON and the fifth partner who I can't remember off the top of my head. And that's what will happen, and Nord Stream will get built. And the Trump administration or the deep state will complain about it, and the Poles will complain about it, and the Poles will buy overpriced gas from Cheniere because the Poles are it's more important to them to not be under the thumb of Germany, both legislatively and economically, because Nord Stream will bypass Ukraine, and then and then they'll have to buy their gas from Germany, and then Germany can cut off the gas and threaten even more, put even more pressure on Poland's political class to do their bidding, right? And so that's why Poland doesn't want Nord Stream. But Trump coming in and saying, "Look, we'll be happy to sell you LNG." Well, that's great. Then just do that and just make the choice. But stop the process. But stop this idea that you need to stop Gazprom from selling gas to Germany, who also absolutely needs the gas, and they don't want to buy, and they're not going to buy the gas from Cheniere. It's just not going to happen. And so it's all nonsense. It's all just smoke and mirrors, and it's creating these unbelievable opportunities for investment in companies that are that the market is overestimating the political risk of the projects associated with that company. And in this case, the company is Gazprom and Shell and everybody else that's involved in the project. It's just silly. These things will happen. And, I'm sure that the House bill has some new language in it. Oh, and that's the other thing. I was reading about the sanctions bill. At the end of the day, any fines that are put on these companies have to pass through a second committee, or there's a separate process for actually putting the fines on. And if we want to really get down to brass tacks, the other day ExxonMobil paid a $2 million fine for violating Russia sanctions. Well, how much do you think Royal Dutch Shell's going to pay? $5 million? $10 million? RDS doesn't care about $10 million. $20 million? It's, at some point, that's the worst case scenario, right? It's not like they're going to put billions of dollars in fines on Shell for financing Nord Stream. That's not what's going to happen. What's going to happen is that since, like everything else, there's regulatory capture in those committees as well, just like the banks never pay more than a 1% fine on the money they steal from the rest of us through, their ridiculous financialization schemes. It's the same thing that's going to happen to the oil companies. So it's all nonsense and virtue signaling and just garbage. Don't let that stop you from making good decisions with your money. Gazprom trading at 119 rubles, with the ruble trading at 60 to the dollar, is an unbelievable buy. Period. It just is. And I've said this before in my articles at Seeking Alpha, and I've said it to my subscribers at Resolute Wealth for years. It's just an unbelievable buy. It might be the best buy in the oil space, or in the oil and gas space. There are 3 major pipelines coming online that are all going to be free cash flow positive in the next 18 months. You have an opportunity to accumulate one of the most important and powerful companies in the world at below stink bid prices. You do the math. Okay. The last thing to talk about with Russia is the note that came out yesterday. I saw on Zero Hedge that Iraq now wants a formal defense pact with Russia, in effect, in the same way that they've signed one with Iran. So now Iraq is becoming part of the BRICS, except that BRICS is now spelled with two I's, and Iran and Iraq are now the two I's in it. And India, which is which is doing everything it can to destroy relations with China, is over some road that's being built on the border with Bhutan. It's really silly, but it's obvious at this point that Modi is working for the United States to stop the One Belt, One Road system, and that's his goal, and to do the bidding and to create a cashless society and a country that has 1 billion people and an unbelievably immature banking system. It's crazy what's going on. So. But if Iraq moves officially into Russia's orbit on this, that's going to mean that the United States is going to have to leave Iraq, and that's the end of that. That's just the end of that, and it's an ignominious end to what was a horrible chapter in U.S. foreign policy, which was the invasion of Iraq in the first place. And so, on that front and on Syria. We're losing on every front on Syria as well. We've got the general in charge of, I can't remember his name now. He made mention earlier in the week that the Russians can push us out of Syria whenever they want because they're actually there legally. And this is the first time an American official has actually made that distinction. And so again, that's telling us that the policy in Syria. This is the thing with Trump. Is policy in Syria is changing for the better. This is that thing with Trump. You got like multiple steps backward and then one big step forward. And it's just unbelievably frustrating to watch, and honestly very hard to handicap. So, all right, the last thing I want to talk about before we get to the charts is I want to talk about Bitcoin because things are getting a little hairy in that market because it's important from a capital fight perspective. It's important from all other, all this stuff again ties together. Bitcoin is a geopolitical weapon at this point. It's a small geopolitical weapon, but it's really more of like a canary in the digital, it's a digital canary in the fiat money coal mine, right? It's telling you that there's something fundamentally wrong with the government-run currency system, and that so staying up with the kind of the ins and outs of what's going on in Bitcoin, I just want to update you a little bit. It's probably going to go over most of your heads, and I read up on it last night at like 2:00 in the morning, and just to be able to talk reasonably intelligently about it. But the truth is that I know if you've been following it all, you know that Bitcoin is going through growing pains, and that something needs to be done, and something is being done, and that with the adoption of segregated witness /2x, this particular Bitcoin improvement protocol, which would double the block size and introduce segregated witness to the blockchain, which will smooth out the transaction process so that effectively, for layman speak, clearing prices and clearing times will drop like a rock, which is the problem. So that portion of it is what's important. That's done. That's not going to change. All right. What's possible at this point is, by November, if there isn't 100% adoption of this, then there's the possibility of there being a fork in the blockchain. And in anticipation of that, a group of Bitcoin miners and developers have begun the process of creating a secondary Bitcoin called Bitcoin Cash that would allow for the people who don't want to be on quote unquote SegWit, what we call SegWit 2x, on that protocol, that they can trade their current holdings on a separate blockchain. And it's almost like the company split. It's almost like ConocoPhillips splitting off Phillips 66, right? And Bitcoin is ConocoPhillips, and then they're going to split off their refining business, right? That from the balance sheet, and so that overall the market cap of Bitcoin will not change. You don't have to worry about the technicalities. You just run the metaphor, and the refining business or Bitcoin Cash will be a separate protocol and a separate balance sheet. That's what it comes down to: a separate company, and it'll be just separate, and there'll be a permanent fork of the Bitcoin market cap. If you add the market cap of the two of them together, it will look exactly like the current market cap today, right? Because at some point, what will happen is, technically speaking, the two blockchains will diverge simply by adding a particular bit to the hash, which will create an entirely different system. And it's very possible. It's easy. It's not really that technically difficult to do. And so that's the potential here. And it looks like that's going to be a reasonable. That's going to be ultimately the most reasonable solution. Everybody gets what they want, and they do so without any kind of fight. And that's the way it's going to work, and that's okay. It's not going to really fundamentally change the price per se of Bitcoin, because it won't necessarily change the price of Bitcoin, because the number of coins that are in existence will just split off the market cap. But the price per coin should stay the same, because, for example, I think there's like 13 million Bitcoins in existence. Say 3 million of them go to Bitcoin Cash, and 10 million of them stay as Bitcoin, BTC versus BCC. Well, then at that point, the price per coin is still exactly the same. It's just undergirding 10 million coins at $2,500 a piece, as opposed to 13 million coins at $2,500 a piece. So that's it. All right. So understand that that's just one of the growing pains that's happening. The same thing is going to probably happen in Ethereum as well. And then there's a couple of other very interesting cryptocurrencies in the future that I've got my eye on, and one of them is EOS, and I'm just starting to do my research on it, and I'll probably have a big article on it for my subscribers at Stock Shocks and Rocks over at Seeking Alpha, which you can look into at seekingalpha.com/Tom Luongo/research, and as well as I'll probably have links to that on my blog at tomluongo.me. So that's what I've got. Let's get to the charts and I'll get you out of here. Okay, so gold has moved up towards 1260, and that's a great thing, right, for gold bugs, because as I've been saying for a long time, that if there's going to be a washout in gold, and so we've already had a pretty strong washout in silver, and we had a washout in gold here. I mean, this is not an insignificant washout. This is $100, but whether or not that's actually the final washout or not that's a good question, because the trajectory of this chart is no longer bullish. The trajectory of this chart was bullish, and with the break of this low relative to that low, we now have a downtrend. So this was an uptrend, this is a downtrend, and this is where we are. And until we break 1300 or 1298.40 or whatever the hell this is, we'll just call it 1300 for lack of a better, for consistency's sake across all platforms, all exchanges, gold will be in a bearish stance. It just will, because we could have a move all the way back up to 1300 and then the whole thing fall off. So, and honestly, uptrends in gold are 4 weeks long, 4 to 5 weeks long. We got a 3-week uptrend here, 4-week uptrend here. We got 4, 5, 4. This is week 3. So we got maybe one more week on this, and if this doesn't last another week, if we get washout, if we get weakness at the end of the week, then we're probably move lower again. And the market wants it to move lower. And again, we're getting, this downtrend that's happening in gold here is happening against the worst of the weakness in the dollar. I want you to understand that gold is weak alongside the dollar. It shouldn't be that way. And it is. And it's telling you that dollar weakness at this point is massively overdone, and that gold, like Bitcoin, is telling you that there's something sincerely wrong. And the market is gradually, and every day that the euro grinds higher, the market is getting more and more and more offside. And that short positions against the dollar right now are at insane levels, and they're at, frankly, unsustainable levels. And so I don't want you to get too high about this. It's a nice little bounce, and if you've made some money trading it, well, that's great. But there's not a lot of trade here, and this is the kind of situation where it's really hard to make a good trade. I'm just going to show you what I mean. You could buy the bottom here, right? But you have to buy the bottom with a tight stop to the downside, with a very high risk of this bottom failing, and then you're getting stopped out for if you keep your stops tight, a small loss, and maybe that's a good opportunity. When you see a spike bottom like you've seen after a 5-week downtrend, to buy the bottom. But if you're waiting for high probability setup, the high probability setup is waiting until you get a daily close above this weekly high. And then still the possibility that it will not close for the week that way. And so really the high probability trade is just this move from like 1240 to 1260. And the rest of it is just taking on a lot of risk for potentially a lot of, some good reward. But again, how much good reward? You're talking about $60 on 1200. You're talking about a 5% gain. Do you want to take on 4-to-1 or 5-to-1 odds for, a 5% gain? I don't know about you, but I'm not crazy about that. $40 on, So, $40 on 1200. Or do you want to just take, or do you want to, 2-to-1 odds or 3-to-2 odds on getting a 20% gain? This is the questions you have to ask yourself when you're putting on trades. Okay. You can bottom pick, but if you do, you have to be very careful. So, all right. And then, if you miss the bottom here what happens then if you get stopped out and then it moves higher? And then the way gold trades, it usually gets stopped out, and then between markets, it moves up $20, and now you no longer have a trade. So, all right. The same problem in gold, and same problem in gold that we're getting in silver, which is that this 1260, 1265 level is starting to look like strong resistance. And now we have the same thing happening here. So note that we've got 3 closing prices. All right, this is 3 opening prices here, and then the closes. Look at where all the closes. Look at these 2 closes, and then this huge down bar, and now look where we are. And silver's trying to push up above 1660, but it really can't. And I think that $16.90 or $17 is at most the top of this rally. And so if you're long silver in any way, you need to be looking to get out and take whatever small gains you might have gotten off of this. Again, now silver is a little different here, because of the violence of this move down from $18 to $15, buying this bottom or something close to it, that had a higher probability of bouncing and turning around than gold did. You could have bought this bottom with a lot more security, right? 3-to-1 odds of it holding as opposed to 5-to-1 or 6-to-1 odds. Excuse me. But always with the idea that the top of this bar would be your exit point. And that's the breadth of your trade. And that would be a good trade, right? Because this is worth it. This is a $1.50, right? On $15. This is a 10% trade, and with options, it's even more than that. So, but again, silver's still looking pretty weak here. If you use downtrend analysis, obviously you can draw, there's a very well-defined parallel down channel here that has the top on this rally over the course of the next week or two, right in this range of 1660 to 1680. And then we'll fall off from there. Again, silver's telling us that the move up in oil is also unsustainable because the commodity markets are responding to global pressure, and silver's not responding to the upside as either a monetary instrument along with gold or as a commodity instrument along with oil. So what is that telling you? And silver is one of the most important important metals in both of those markets. Okay. The last thing I want to talk about is, the last time we talked, we had the potential for this massive bullish engulfing bar to happen in Bitcoin, and we got it, right? We got a close here well above this high, which is just a massive explosion to the upside. Now, the weakness we've got this week actually has been in effect since like 3 o'clock this morning. So we got a small sell-off this morning and back down towards resistance at 2,500, because there's good solid resistance between 25 and 2,600 in Bitcoin. So you want to watch this area to see if we got a daily close below this, because then we might get further downside action and then a move higher. We'll see. It's going to be very interesting to see how this plays out. But any relatively strong defense of 2,500 here, the closer we get to August 1st, which is when everything's supposed to go haywire in Bitcoin. We get past August 1st and we're still above 2,500, then going to then breaking through 3,000 will probably take Bitcoin to $4,000. That's my read on the market, and it will also probably take many other cryptocurrencies along with it, like Coin. I think even Ethereum will get up. Will get up off of its back and move back towards 250 or 275. Okay, so that's what I've got for this week. So let's see how these things play themselves out. Let's see if Trump's tweet storm this morning is indicative of a change in strategy and how he's going to deal with his AG and his cabinet, and see if he's actually going to start going on the offensive, which he absolutely has to. Donald Trump at this point needs to prove that he's not a weak bully, but actually a fighter. And he hasn't proven that to anybody yet. And that's why we are where we are. He's proven, he's not proven that as president. And he needs to. He needs to prove that he's a strong leader. And a strong leader that's willing to, in fact, damn the torpedoes and dare them to impeach him. If he does that and he comes out the other side smelling like a rose, it's going to be a bad time for Democrats and rhinos for the next 8 years, next 7 years. All right, you guys take care. You have a great week. We'll talk to you soon. You keep your stick on the ice.